Palantir Technologies has been making waves in the stock market, and today we're diving deep into whether this AI-powered data analytics company is still a good buy after it fell 8.5% in August to $30 and bounced back higher. With Palantir already up over 90% this year, we need to ask, is this a buying opportunity or are we too late to the party and going to see signs of further weakness? Let's start by understanding what Palantir does. They're a data analytics software provider with strong ties to the US government and advanced AI capabilities. Many investors see Palantir as a prime beneficiary of the ongoing AI revolution, which explains a lot of the excitement and hype surrounding the stock. Now, here's something interesting. Palantir has the potential to join the big leagues and be added to the S&P 500. To make it into this prestigious index, a stock needs to meet specific criteria. Palantir ticks most of the boxes. It's a US company with a market cap of $70 billion, well above the required $18 billion. It's a highly liquid stock with a public float of at least 50% of total shares outstanding. The only hurdle? Profitability. While Palantir has reported positive earnings in each of the last 4 quarters, they've been tiny profits. The S&P committee might want to see a few more quarters of solid earnings before giving Palantir the nod. 1 or 2 more quarters of positive earnings could be enough to see Palantir added to the index by 2025. Let's talk about Palantir's stock performance since its IPO in September 2020. If you've been in the market for a while, you know IPOs can be a wild ride, and Palantir was no exception. Starting at its IPO price of $10, the stock skyrocketed to $45 by January 2021. That's a 350% increase in just 4 months. The kind of growth that gets people talking and generates those flashy headlines we've all seen. But what goes up must come down can most likely be applied to the majority of IPOs. Over the next 2 years, Palantir experienced a massive correction. The stock plummeted 86%, bottoming out at $5.92 in December 2022. For those early investors who bought at the peak, this will certainly have stung. But for others, it presented an opportunity. Since hitting that low point, Palantir has been on a steady climb. It has been able to remain above the $30 mark. That's a 400% increase from its lowest point. Sounds impressive, right? Looking at the history of the stock, it has not been able to remain above $30 for the majority of the time it has floated on the market. It declined below $30 in February 2021, and it wasn't until August 2024 that it was able to breach that level again. So in reality, we're just back to where we were over 3 years ago. Stepping back and staying objective, which means keeping your emotions, wants, and desires in check. Despite all the recent gains and the excitement surrounding Palantir, the stock is still trading below its all-time high of $45. So from a broader perspective, Palantir is still stuck in what we call a consolidation or a sideways market. It's been bouncing around, making some gains, but hasn't yet broken out into a clear long-term uptrend. This is despite a positive earnings report on August 5th, where the stock climbed 38% from $24 to $33. The momentum from earnings took Palantir stock through to a new high for 2024 at $33, but it's still trading comfortably below its all-time high of $45. So, having done the analysis, we now need to start asking some tough questions. Is Palantir a good buy at its current price? When is the right time to buy, if at all? To answer these questions, we need to understand the pros and cons of buying such a young stock. Let's start with the positives. Palantir is still a relatively new stock. It turned 4 years old at the start of September, which in stock market terms is still pretty young. Many of the stocks we have analyzed on our channel are decades old. Palantir is very much a new kid on the block. This could be seen as an advantage because it means we're still early in Palantir's history as a public company. If, and this is a big if, Palantir performs like some other tech giants over the next couple of decades, Nvidia, for example, recently broke through the $1,000 per share barrier before a 10-to-1 stock split. Getting into Palantir now could potentially lead to significant profits down the line. Another point in Palantir's favor is its price point. At above $30 a share, it's still relatively affordable compared to some other big tech names. This means you can get more shares for your investment dollars, which could translate to bigger gains if the stock takes off. But let's not get ahead of ourselves. There are also some significant drawbacks to consider when it comes to investing in Palantir. First and foremost, its youth as a public company means it lacks the long performance history that many investors prefer. Typically here at Sublime Trading, we like to see at least 5 to 10 years of public performance history to get a good sense of how a stock has performed in the past and under different market conditions. With Palantir, we simply don't have that kind of data just as yet. In its first 4 years, it has only really moved sideways, which is normal for an IPO. Very rarely do they shoot off as an early investor hopes for. This lack of history and the fact that it's trading in a consolidation ties into another concern: volatility. Young stocks often swing unpredictably until they settle into a more stable pattern. And as mentioned already, this settling process can take years. We've already seen this with Palantir's dramatic rise and fall in its first couple of years. While this volatility can present opportunities for short-term traders, it can be nerve-wracking for long-term investors looking for steady growth. Another issue to consider is that Palantir is still trading inside consolidation. This means it's been moving sideways in a general sense, bouncing between highs and lows without establishing a clear long-term trend. Stocks can remain in consolidation for years, which means your investment might not see significant growth for quite some time. Palantir is only likely to move sideways until it decides to take off. Tesla, for example, moved sideways for 3 years before its first major uptrend. Perhaps most importantly, we need to consider the nature of the current investor interest in Palantir. Much of the buying we're seeing is based on hype and potential rather than proven performance. While Palantir certainly has promising technology and important government contracts, it hasn't yet shown the kind of consistent growth and profitability that we typically look for in a strong long-term investment. Nvidia, for example, has already demonstrated 3 massive periods of growth. It's a true thoroughbred in the tech world with a dominant position in GPU technology that's critical for AI development. While Palantir is still trying to prove itself, Nvidia is already leading the pack. Now, I want to be clear. I'm not saying Nvidia is guaranteed to outperform Palantir over the next 12, 24 months, potentially longer. There are no guarantees in the stock market, but when I look at the odds, when I consider the proven track record versus the potential, I see Nvidia as a much stronger investment. Now, staying with big tech for a second, let's compare Palantir's recent performance with big tech and the tech sector in general. This is where things get really interesting. Nvidia is down 25% from its all-time high in June. Apple is down 7.5% from its all-time high in July. Microsoft down 13% from its July high. Google is down 18% from its July peak. Meanwhile, Palantir, while still below its all-time high of $45, has climbed 48% from its June lows at a time when big tech has slumped. Big tech's performance has caused an 11% drop in the IT sector in general, but Palantir is performing where big tech stocks are failing. This could be a sign of the strength of Palantir as it leads the tech pack, or it could be a temporary divergence away from how big tech is performing. Either way, it's worth keeping an eye out on what is happening here. So given all of this information, when might be the right time to buy Palantir? Well, there are a few schools of thought on this. For the more aggressive investor, this move back above $30 could be seen as a buying signal. Palantir has been struggling to break through this level, and it has finally done that. It could indicate strong buying pressure that might push the stock even higher. However, more conservative investors might want to wait for even stronger confirmation. This could mean waiting for Palantir to not only break above its all-time high of $45, but also to push through the psychological resistance level of $50 and stay above there. This would show that the stock has real momentum and isn't just experiencing a temporary surge. This brings us to a crucial point about investing. It's not about following the hype or jumping onto the latest trend. Successful investing is about making smart, calculated decisions based on performance history, market position, and future potential. It's about stacking the odds in your favor as much as possible. This doesn't mean you should never take risks or invest in younger companies, but it does mean you need to be strategic about it. If you do decide to invest in a company like Palantir, it's crucial to manage your risk. A good rule of thumb is to never invest more than 2% of your capital in a single high-risk stock. This way, if the investment doesn't pan out, you're not risking your entire portfolio. Remember, every investment decision you make is either moving you closer to your financial goals or further away from them. Palantir is a good company with interesting technology and significant government contracts. It's riding the AI wave and generating a lot of buzz. But as an investment, it's still unproven. It's a young stock with a volatile history, still trading in consolidation. If you're determined to invest in Palantir, wait for the right entry point, which would be a breakout above a previous high. A bounce from $30 is a sign of strength and an entry for the more aggressive investor. For the more conservative investor, applying patience and waiting for a move through Palantir's all-time high, $45, and potentially even a breakthrough $50 will signal the right buying setup. These would be signs that the stock is gaining real momentum and not just experiencing a temporary surge. Remember, successful investing isn't about chasing the latest hype or trying to guess the next big thing. It's about making informed decisions, managing your risk, and consistently working towards your long-term financial goals. It's about being patient, doing your research, and not letting FOMO, the fear of missing out, drive your investment decisions. Sometime in the future, we may talk about Palantir in the same way we talk about Warren Buffett's Berkshire Hathaway, which has recently become the first non-tech company to reach a market cap of $1 trillion. In our next video, we'll dive into why we've been adding more Berkshire Hathaway shares into our portfolio and why you would want to consider doing the same.